Good afternoon, Ms. Tang and fellow analysts. I'm Sharon, and these are my teammates Dat-Zixuan. We are very pleased to present to you our findings on Hotel Properties Limited and Hotel Royal Limited. For short, we'll name them HPL and HRL accordingly. And okay, let me first give you an analogy. We believe that investing in stocks is similar to watching a soccer match. You have to analyze both team strengths and strategies. They may choose different strategies, for example, aggressive or being conservative. However, no team will always win, and we have to know their strengths and strategies. And just like in any investments, there are bound to be any risks involved. However, if you do not take the shot, you will never score a goal. So we are here to deliver excellence for your confidence, and now we want to make you confident to take that shot. Let me first begin with an overview of our presentation for today. I will bring you through the background of the companies and comparing the financial data, as well as going through the competitive advantages of both companies. And that will bring you through the fundamental differences. And lastly, Zixuan will bring you through the future challenges and concluding at the end. Let us take a look at how this industry is performing right now. There is lots of growth opportunities in this industry right now. As you can see the use of mixed-use development, we can see in Singapore the integrated resorts, the Marina Bay Sands and Resorts World Sentosa. They have been using a mixed use of hotels together with casinos, theme parks. And we believe that this is where the trend will be heading to in the future. So it is a good time to invest right now, as you can expect lots of returns. Now I'll talk about what is in the portfolio of both of these companies, HPL and HRL. Okay, Hotel Properties Limited is a very large company. Under their portfolio, they are in charge of hotel management and also investment properties. They have 24 luxurious 5-star hotels over 11 countries. This is extremely huge, and they are targeting the 5-star hotels, which means that they tend to focus more on the high-income customers, and their investment properties are located within Asia. Their source of revenue is pretty much evenly distributed between their hotels and their investment properties. Similarly, for Hotel Royal Limited, they are also involved in hotel management and investment properties. However, they are of a much smaller scale compared to HPL. They have 4-star hotels located only within the Southeast Asia as compared to HPL, which is global. And targeting 4-star hotels means that they tend to focus more on the middle-income customers, and they also have some investment properties within Southeast Asia. Their main source of revenue comes from their hotel management, which takes up to 80% of their total revenue. Now let us look at some financial data and see what these numbers tell us. According to the annual report 2011, we can see that HPL has done relatively better than HRL in terms of ROE, ROA, and ROIC. This means that it is able to generate more profits and better returns for its investors. I will not go too much into detail about the financial data, as I believe you already have good knowledge of this. However, I would like to emphasize on the dividend yield. As you can see, although both stocks have about the same price, you can see that HPL has a much lower dividend yield compared to HRL. This is because they tend to reinvest more of their funds into expansion projects, so investors can expect more capital appreciation instead. Whereas for HRL, they have more dividends, as they tend to give out more dividends back to their investors. So this is an important consideration for you, Ms. Tang. If you are looking for an income stock, then HRL may be a better choice. If you are looking for a growth stock, HPL may be the better choice for you. Now I'll move on to discuss on the competitive advantages, which is the respective strengths and strategies the companies have to win this game. The first will be having a global presence. Having a global presence is very important in the hospitality industry, and we can see that HPL, as I mentioned earlier, they have a very large portfolio of 24 hotels in 11 countries. This gives them a very large global presence, and also they are managed by several well-recognized brands such as Hilton International and Mandarin Oriental and Intercontinental. All these we have heard of before. On the other hand, HRL has more of a regional presence as they are located within Southeast Asia. Most of their operations are mainly focused in the Southeast Asia region. So in terms of this, they may be losing out a little to HPL because they have a smaller global presence and they are not able to reach out to as many travelers across the different countries. Next will be having excellent customer service. This is the #1 factor in the hospitality industry. Because if you do not have excellent customer service, nobody will come back. So it's very important for companies to achieve this to maintain their customer loyalty so that their customers keep coming back. And also this will allow them to sustain their profits in the long run. On the other hand, HRL has also done pretty well in this area, as you can see from the numerous awards. They have won the Singapore Quality Class Award. Although this is one of the major awards they have won compared to HPL, because they have global recognition. They have won like 10, 20 awards overseas. However, they have a different focus. HRL wants to have a vision of making every room a home. So they are targeted more at making their rooms more comfortable, more cozy for their travelers, which is very different from what HPL is doing. However, I have to say that both have done very well in this area. Lastly, for effective management team, having an effective management team is very important because it will set the direction of where the company will be heading to. And for HPL, their board of directors are from all over the world. They have experience working in various MNCs in different countries, and they tend to be more aggressive. Their management style tends to be more aggressive, and they are aggressively expanding overseas, growing the business. That is what they are heading to. Whereas on the other hand, HRL, they are more family-run business, so they tend to be more conservative in their management style, and they are mainly Singaporeans who have worked in Singapore almost all their lives. So they are more conservative. They just want to focus on their operations within the Southeast Asia and don't have any big plans to expand overseas. So I hope that by now you have a better understanding of which company is better in terms of their different strengths and strategies. And now I'll hand over to Dart, who will show us how the companies use these competitive advantages to change into their action plan.
So thanks, Sharon, for your very detailed analysis. Now we stand as you understand more about their competitive advantage. Let me move on and tell you how the two companies apply their competitive advantage to transfer their competitive advantage into action to achieve their individual goal. And we do so by analyzing their target customer, their current and future development, and hopefully by the end of my part, we can have a brief idea of which one is doing better. So in terms of target customer, hotel property, they take advantage of their global presence and international brand, so they target the high income group. And this concept applies for both their hotel and property sector, and their target market is spanned all over the world. Hotel Royal, on the other hand, it makes use of its local knowledge, choose to target the Singapore and the regional countries like Malaysia and Thailand, and its target customer is the middle income with 4-star hotels. But it doesn't mean that Hotel Royal is less profitable because it targets the middle income group. Let's just imagine that this is a soccer match and the target customer is at the initial game plan in the match. It doesn't matter what the plan the team used. What matters most is that the plan must suit their competitive advantage. And I think that both companies have adapted this concept very well in choosing their target customer. So now the game has been set. Let's move on and see how they play their game in the hotel market. Hotel property is a very aggressive player. In terms of hotel operation, they continue to expand and acquire new hotels. And in 2011 alone, they acquired 4 more hotels and resorts all over the world. The same thing goes for their property sector. They continue to design and develop extremely luxurious condominium and apartment for a very small group of affluent customers. Hotel Royal, on the other hand, is more conservative in its approach. So instead of expanding, it just tries to maximize its current revenue and room occupancy rate. And in the last 3 years, only acquired 1 more hotel in Thailand. The same thing goes for their property sector. After they finish their royal residence in 2012, they will not engage in any further property project. So this is what they are currently doing, and from there we can see very clearly where each companies are heading for the future. Hotel properties are very aggressive, and we can expect that they will continue to expand, engage in new projects and new opportunities to further diversify their portfolio investment in both the hotel and the property sector. Hotel Royal, on the other hand, is more defensive. They will just maintain what they are doing, and they have no specific expansion plan for the future yet, but still they keep an eye opening for new opportunities. But the difference is that they don't actively seek for the opportunities like hotel properties. But it doesn't mean that Hotel Royal is any worse than hotel property, because just like in a soccer match, you can be aggressive, a team can be defensive, both are fine. As long as they manage to achieve that final goals, both can be considered successful. And as far as I'm concerned, both companies have been very successful in achieving their individual target. So why is it so? Let's move on and see what they have achieved so far. Hotel property, in terms of mission, it want to provide a world-class service to its customer. So its continuous effort in doing so is recognized by numerous international awards. And not only the investment in the new hotel and resort apartment win international award, it also generates healthy profit for the company, and it's proved by the fact that their ROE is 5 times higher than the industry average. And that's why the investor have a high expectation for growing opportunities in hotel properties, and that's why their stock increased 60% in the last 1 year. Hotel Royal, on the other hand, they never win any international award, but they still live up to their commitment to deliver excellent service to their customer, and their commitment and continuous effort is recognized by certain local awards. And in terms of financial performance, they may lose out to hotel property and the industry in certain ratio, but still they manage to generate a sustainable source of revenue, which is increasingly sustainable in the last 4 years, you can see from the graph. Together with the fact that they have little project to invest on, it allows them to pay out an average dividend yield of 2% in the last 5 years, which is 4 times higher than the industry average. So in conclusion, which one is a better choice? I think that most companies have been very successful in transferring their competitive advantage into action and then achieve their final goals. And then the final choice, very obviously, it depends on whether you're looking for a stock that have a lot of opportunities for capital appreciation like hotel property, or you look for a stock that can generate a sustainable source of dividend income like Hotel Royal. But no matter what choice you make, I can assure you that this is the win-win situation. But before you make your final choice, please hold on and remember that investing in stock is just like betting in a soccer game. There are always future challenges and certainties involved. So let me encourage Zixuan, go through all the potential challenges that you may face in investing in this stock so that you can make a better decision in the end. Zixuan, please.
Okay, thank you, Dad. So now after you have a better understanding of the current prospects of HBL and HRL and the hospitality industry, allow me to take you through the future challenges that both companies might face. So future challenges are actually like the injuries that the players will sustain and the red cards that players might receive in a soccer game. So for future challenges, my group has actually classified future challenges under 2 different types of factors. So we have the uncontrollable factors and the controllable factors. So allow me to bring you through to define for you these 2 terms. So for uncontrollable factors, there are events that happen unpredictably, and that companies can do little to alleviate the effects of these factors. And these are like the red cards in a soccer game. So when a player is issued a red card, he is dismissed off the field and not allowed to come back again. So as the manager, all you could do is to adjust the strategy of your current team without adding an additional player in to continue to win the game. So next we have controllable factors. Controllable factors are events that the management might have predicted, and they have come up with certain measures in case such factors come up so that they are able to counter these factors. So these are like injuries in the soccer game sustained by the players. So if a player gets injured, the manager is able to substitute in a new player in order to maintain the current team's dynamics and to use the current strategy to continue to win the game. So now without further ado, I will go on to talk about the uncontrollable factors. So for uncontrollable factors, we have natural disasters and global epidemics. So in the past 10 years, we have seen how devastating tsunamis and viruses like SARS and H1N1 can be. So most importantly, these these natural disasters and global epidemics have an adverse effect on the hospitality industry. So for example, in 2003, because of SARS, the hospitality industry in Southeast Asia was hit very badly, with losses amounting up to billions of dollars. So yes, this is a current challenge that both companies face and the hospitality industry will face, but we foresee that this challenge will continue to persist in the future because of how the world is like. And because of HPL's international presence, we feel that HPL is more susceptible to this future challenge than HRL, which only has businesses in the Southeast Asia region. Next, we have the controllable factors, which firstly we have the government laws and regulations. Every country has their own laws and regulations, and these change from time to time. So for companies to go into other countries to operate your businesses, you have to know these laws and regulations very well. So for example, in 2013, Singapore's government passed 2 laws. First, they passed a law to cool the residential property market in Singapore, and second, they passed another law to limit the quota of foreign manpower employed by companies. So the former actually controls the property market in Singapore, and they also aim to put a stop to the continued rise of property prices in Singapore. And this will directly affect HPL as they have quite a few residential properties in Singapore. And the latter will affect both HPL and HRL as there is an increasing trend of reliance on foreign workers in the hospitality industry, particularly in hotels. So since both companies they mainly engage in the hotel business, this particular law will affect them in Singapore. However, the impact on both companies will depend on how the management of each company will handle the situation. Next, we have the foreign exchange rate risk. As both companies engage in business transactions that involve foreign currencies, they will be exposed to this particular risk. This particular risk is mainly due to the volatility of exchange rates, which both companies cannot control. So, because of HPL's international presence and they have more companies, more hotels internationally, they will be more susceptible to this particular challenge than HRL, which only has 2 businesses in 2 other countries, Malaysia and Thailand, other than Singapore. So they will be less susceptible to this risk than HPL. Okay, so in a soccer game, when the final whistle blows, as a spectator, you will ask yourself, was the match enjoyable to watch? Was the time spent watching the match worthwhile for you? So likewise, for an investor, you will ask yourself this question as well. Would your investment in the hospitality industry be worthwhile? Well, our answer is yes, of course it will be. According to a research done by HospitalityNet, one-stop online resource for news in the hospitality industry, they mentioned that the future looks promising for the industry despite economic uncertainties in the world today. Furthermore, analysis done by Q Finance, another website that our team has managed to source online, they said that although there was an economic downturn in 2008 to 2009, the hospitality industry showed a strong rebound in various parts of the world, particularly in the Asia Pacific region, where both HPL and HRL mainly focuses their business in. So in 2013, the hospitality industry is one of the largest industries in the world, and it is rapidly growing in the near future. So now you will ask yourself, which investment will you choose? Will you invest in HPL or HRL? Well, looking at the competitive advantages that both companies have that Sharron has mentioned, HPL is mainly focusing on the international expansion and they have businesses all over the world, whereas HRL is mainly focusing on the Southeast Asia region. And next we have the fundamental differences mentioned by Doug. Mainly, HPL is a more aggressive company and they focus on expanding, and HRL is mainly focusing on the Southeast Asia region and they are more conservative on maintaining their current hotels. So looking at all these future challenges, the future challenges for both companies are rather similar, so we shall not talk about that. So ultimately, it all boils down to what is your risk appetite. So being a more aggressive company, HPL will reap higher capital appreciation in its investment and their future growth would be expected. Whereas for HRL, since it is more conservative, it's a safe, reliable, and sustainable investment. And as an investor, you can also enjoy a high dividend yield. So in all, to sum up the presentation, I feel that our team feels that ultimately it depends on the risk appetite, and we, based on our in-depth analysis and the report that we have prepared for you, we hope that you are confident to take a shot at your desired investment now. Thank you.
So I have a question for Ms. Sharron. So you said that HBL has a global presence, whereas HRL is more regional in its expansion. So can you pass a judgment on which approach you think is better in terms of consistent growth? Because I'm looking for a portfolio that can offset the risk of my other more risky investments. So can you pass a judgment on which approach you think is better for consistency-wise?
Thank you for the question. Can I check whether you are more concerned with risk appetite, as in you want something more safe, you want a safer investment, or you are willing to go for a riskier investment?
Because I want to diversify my portfolio, so actually I'm looking for a safer investment.
Okay, if you want a safer investment, actually HRL will be better because they are more conservative. They are focusing on their current operations. They don't have aggressive expansion plans. So they are just renovating their current hotels, improving and increasing their room rates and their occupancy rates, all that. So it will be a safer investment, and you can ensure that you will get a steady stream of dividend income.
But the business is still consistently growing.
Yes, the business is doing very well within the Southeast Asia region.
Okay. And a second question is, you mentioned about the different management styles. So for HRL, they have a very aggressive and diversified management team, right? So are there more risks in terms of in this area? Because HRL seems like a safer kind of management style.
Okay, thank you for the question. Okay, I believe that HPL, because their board of directors are more experienced, they have various experiences from working overseas, they have the context there. So when they want to diversify, I believe it's after much consideration, and they have deep understanding of the market. That's why they choose to do it. So it will not be very risky. As you can see from their performance, all their hotels overseas have been doing very well. Yep, so that's not a point to worry about. Thank you.
Thanks.
Okay, I have a question for that. So you talked about target customers that one of them focus on high income and the other focus on low income. So from my understanding, Hotel Properties was incorporated later than Hotel Royal. So I'm wondering whether they started out straight away targeting the high income customers, or did it progress somehow until what is now?
Based on my understanding, I mean, like, as an investor, we should look forward in the future, but you raise a valid point. We should look backward to see what they have done in the past. And based on my understanding, that Hotel Property, they already started out as an investor in luxurious hotel. So their target customer has been the high income group all the way since their establishment.
Okay, thank you. I have a second question. You mentioned that Hotel Properties is more aggressive and they invest in a lot of hotel and property. Do you have like any idea how they choose what hotels and properties they want to invest in?
Okay, then let me separate into two parts, the hotel and the property. In terms of hotel, they don't restrict their limit. They will go everywhere, find the strategic location. Like the two hotels I show you, they just newly acquired, one in Tanzania, Africa, and one in Czech Republic, which is a very distant country, but they see the potential and they go for it. So they actively shift through all over the world, find a strategic location to acquire and build new hotels. In terms of property, they only engage in the property development in the last, I think from 2000, if I'm not wrong. And then so that their focus currently is only in Singapore, mostly Singapore market, a bit in Hong Kong, and one condominium in Thailand market. So for the property sector, instead, not like the hotel sector where they expand all over the world. The property sector, they only focus in Singapore, Hong Kong, and Thailand market. And in the near future, they continue to focus on the Singapore market. They will not go further than that because it's still a new sector for them.
I have two questions for you, Zixuan. So, the first question is relating to, you just mentioned that HPL is actually more susceptible to the epidemics such as SARS and H1N1 as compared to HRL, correct? Yeah. Can I ask, how do you define this more susceptible? Is it in terms of likelihood or is it about impact? How do you derive this conclusion?
Okay, thank you for your question. Actually, for likelihood of such natural disasters and epidemics happening, there's nothing that anybody can control because they will just happen. So regarding what was your next? The
impact.
The impact. We feel that the impact on HPL will be bigger because HPL has operations all over the world. So it's like if such a global epidemic happens, they will have more hotels being hit, as in more hotels, businesses will suffer. And particularly for natural disasters, because HPL has they have hotels and resorts all over the world compared to HRL, which only have hotels and resorts in Malaysia, and Thailand. And in Malaysia and Thailand, in recent years, they don't really have much natural disaster. But then if you talk about the rest, like maybe for HPL, they have like in Indonesia or like North in America, that kind of areas, they'll be more prone to natural disasters. So in terms of likelihood, that will have a higher likelihood of happening, and hence the impact will be greater for them. Yeah.
Right. As for my second question, you were mentioning about forex exchange risk between the two companies, and that HPL is being more foreign, as more foreign operations is actually more susceptible to foreign exchange risk. But can I ask, what exactly have you checked the annual reports to determine whether are there any measures that these two companies want to do in regard to this risk?
Actually, thank you for your question. So for HPL, actually in their annual report, they did mention that they practice natural hedging to counter such a foreign exchange risk. And then that's mainly what they do. That is stated in their annual report. But for HRL, they didn't really mention because for HRL, they are like what I said earlier, their overseas operations mainly is in Malaysia and Thailand. So like they only have two. So even if they don't practice any hedging, it won't really be that much of an impact. But for HPL, it will be more. They have to practice natural hedging because they have operations all over the world.
Thank you.
Okay, so to sum up, thank you for all your questions. So to sum up the Q&A, we feel that for HPL and HIL, their main focus is on the hotel properties in the world. So both of them have different management style, and hence that results in the different target group that they are looking at. HPL is mainly looking at the higher end people, and they are mainly looking at the international scene. Whereas for HIL, they are mainly looking at the middle income, and they are not looking into any expansion yet. So they are just happy with what they are doing, and since they are reaping steady, they are giving steady dividend yield, and they are doing quite okay. They are okay with what they are doing. Whereas HPL, because maybe of their aggressive management, they want to expand more and to be more known around the world.